Hello and welcome to Fintech Diary. My name is Amol Dete and I'm in conversation with Chattanathan Devarajan, the co-founder and CEO, Arya.ag. Nathan, glad to have you.
My pleasure.
So Mr. Nathan, to begin with, tell us more about Arya.ag. We understand that you are working in an agri space, which is kind of a very unusual space. A lot of innovation that is happening in the country are happening more towards the BFSI space. But I understand that you are working in the commodity finance space, helping the farmers in fact protect their grains and kind of giving them a finance already. So tell us something about Arya One in terms of the business model. How many employees do you have? How many loans or how many products do you have? Just give us some sense about Arya.ag.
See, Arya.ag is an integrated grain commerce platform.
Right.
It's the largest platform in the country. So actually we started, the three co-promoters, Anand, Prasanna and myself, started this almost 10 years before.
Right.
So what we thought at that particular point of time is there are a lot of inefficiencies in the markets, especially more towards the primary and secondary markets, near to the farm gate. We were all working in ICICI Bank and we were handling commodity business as a part of our official life cycle itself. Then we thought that there's an opportunity for us to get into the space and create the integrated grain platform. But we traveled a path. So initially we acquired a company called Arya Collateral of the J.M. Group.
Okay.
So they were very small. They just had about 2 crores of turnover and were making a few lakhs of losses also. So we acquired because we thought that probably we'll get an edge of a year or so.
Okay.
So when we wanted to bring this platform, the complete platform, integrated platform, basically there were 3 columns which we wanted to address. One column was the warehousing, where you talk about the storage stack. The second column which we wanted to address was the finance stack, which is what the fintech piece which we were talking about. And the third was the market space.
Right.
So instead of doing everything simultaneously and burning money, what we thought was let us make each of these individual columns profitable and integrate it into one platform.
Okay.
So Arya.ag is now an integrated platform. So there are verticals which are there, which is Arya Collateral Warehousing, which is into the storage, Arya Dhan Financial Solutions, which is into finance, and Arya Tech, which is into trade, everything integrated as Arya.ag as an integrated platform.
Right.
So if anybody wants to have only one service of that particular column, he can have that service. Suppose I am a farmer, I want to have only storage service.
Right.
So I could just restrict myself to the storage service. If I am a farmer, if I want to have only finance, I could restrict myself only to finance space.
Okay.
If some farmer wants to just have trade, he can just trade.
Okay.
Or if a farmer wants to pass through the cycle completely, that is, he is actually putting his grain and he travels through the path, access finance, and then actually go and trade in the platform itself. Everything is possible end to end.
Okay.
So that is how the structure is. So you have 3 companies which are there, all blocked or embedded under Arya.ag.
Sounds interesting, Mr. Nathan. But let me ask you a very, a softer question in terms of understanding, the logic behind Arya.ag. Because when I look at the fintech companies, they really have very interesting names. And in fact, sometimes I often think what's there in the name because they misspell the name, for example, Lakshmi, right? Or so many names like that. But here, your name sounds really complicated, Arya.ag. It's not as maybe simple as the fintech founders have been naming their company. So what's the logic behind this?
Arya is a name which you acquired from J.M. Group.
Yes.
So Arya Collateral was there. So Arya is a name which we acquired. We are into agricultural space. So hence it is Arya.ag. So nothing glamorous about it. It's the name just as simple as that.
Okay. Sounds good. So when you say specifically that you have these 3 blocks, which block is most profitable for you or which block, is giving you more business?
One thing, as I said at the beginning itself, we have been profitable right from the beginning.
Right.
So what is one of the important things which we ourselves determined as promoters is that we will ensure profitability is the core for our business. We will not burn money. So we became profitable in the first year itself. So when it was column 1, which was storage, we ensured that we tie up with larger corporates, make money at the beginning itself. So no year has been there where we have not made money. So we have been continuously making money across. So tech platform which got created because there was tech expenses last year, that's the only column which is there, which was not profitable last year. And even there we'll make money this year. So all the three individual independent entities are there. So what we actually try to do is that instead of looking at profitability, what we are trying to do is that every grain converts into an electronic balance, right?
Okay.
And in that, what are the services which we can layer out is what is critical to us. So we don't exorbitantly, for example, even in the finance side, like a microfinance company, we don't charge a huge amount of interest and all. If you see the rates and all, we charge anywhere between 12.5 to 13.5, max to max 14%, right? What we try to do is that how do we layer services to each of the entities which come in and travel through the platform. So for example, somebody gets into warehouse, takes finance also, sells the commodity in my platform itself. So that's the process which I have been undertaking. So initially we were having an overall take rate of about 1.8%. We have moved to 3+ now. So my belief is that at a matured stage, we may reach to about 10% of take rate.
That's quite meaningful. But understanding your profitability part, which is very tough for the new age startup companies, fintech companies, or even if specifically offering the tech solution companies, is it that the product or the area that you are in is profitable and where it's perhaps easy to make money than many other products?
More of a choice which we have made for ourselves. For example, if we would have started all the three together, right, in the beginning itself, without becoming conscious of the profitability, then maybe we would have ended up making a little bit of losses in the initial years.
Right.
We were conscious that this is the way we have to work. So hence we decided and we scaled up our businesses accordingly, right? It's not that, for example, today if you see my finance book, right, it's not that in a single year we have gone ahead and did 1,000 crores of book, right? So we have traveled a path. So initially we had 100 crores, then 300 crores, then this year, for example, at the peak in June we touched about 500 crores. Next June, because it's an agriculture season, we watch June to June. So my belief is that by next June we'll cross about 1,000 odd crores. So there is a choice. Choice is that do you want to pump and make losses, put in lot many people, and then get into a stage where you want to scale it up, or you become profitable, be conscious about what you do and then do it. And second thing is that in agri there are a lot of inefficiencies which you can tackle by automation, right? Because if you see the rural spectrum, you have a lot of issues. Issues are in terms of transparency, right? Because transparency is not there. Issues in terms of fragmentation of land holding. 84% of actually the total farmers are small and marginal farmers who are having 5 acres and less, and they are distributed across. So if you actually try to address these problems just by physically being there, without aggregating all these services, right? And if you're just managing independently, probably as what you said, the respective companies, fintech companies would have incurred losses. What is our strength? We are attacking the grain first. So you're getting into the grain first, get into storage. So whatever you want to do with that particular commodity, you're in a position to take it through the cycle. So I think that is the strength which we have, and that's a deterrent for many others to come in.
Yeah, and I think it's a smart decision, in fact, to go ahead with non-perishable commodities like grain. I think that's a very wise decision.
And just to give this perspective, because for example, we invest our time before we build businesses. For example, when we felt that small and marginal farmers is the segment which we want to address, 4 years before we just studied the FPOs. 1 year we spent studying FPOs, right? So 1,000 FPOs across membership, GPS, everything we've mapped together. Next day we started engaging with them, right? Then the third year we started actually inducting finance after actually educating them. So in the first year when we started finance, probably we would have disbursed only about 1.5 crores. Now it's almost 40-50 crores we are disbursing. My belief is that by around 2025, when we talk about the future, I have a strong belief that we will have about at least 500 crores of book with 650 to 700 crores of disbursement just happening on the FPOs segment. And we are nurturing that. So we have the patience to actually groom them, talk to them about the benefits, then take it through. So when we were actually getting into these spectrums, we also had problem statements from their side. Their side is that we lend against commodities. What if the price falls? Who will pay the margin? what if, because they're all small entities,
Yes,
right? They don't
yes.
have enough of capital. What if, in the end, if I make a loss?
Yes.
So what we did was that we actually pulled all commodities together and analyzed actually data and found out that at a particular point of time, it's not that all commodities prices are falling. So
Okay.
based on that analysis, we created a guarantee fund in association with Rabo. So it is a two-step guarantee which is there as far as the FPOs are concerned. First step guarantee is that whenever prices fall, right, during the tenure of the loan,
Okay.
if the margin is actually invoked, instead of the FPO actually paying the margin, I invoke the guarantee to get the margin call. The second step guarantee is at maturity, if due to a reason, any price fall is there, whatever is losses incurred, that loss can also be invoked through the guarantee. So this is a guarantee fund which created for the
Right.
sake of FPO. That's why I said that it's not just lending alone. We are taking the nuances and the difficulties which are there in the markets and trying to build products
Right.
suited to those needs.
Okay, quite remarkable one. I think most of this people watching this particular show will pick up this line that we studied and observed the market before
Absolutely.
offering that. I think biggest mistake sometimes the startups do is, the moment they open their shop, the first thing they do is they scale up the very next day, right? I think that's. I mean, again, everybody has a different
Absolutely.
business models, but I think they believe in the speed more.
Absolutely.
So I think you.
And it depends upon what is the priority. For example, as I was telling you, first year we were profitable because we could go and address corporates rather than getting into retail. So
Right.
first we built businesses with less margins, but on an absolute basis we wanted to become profitable.
Right.
Later, the composition got changed because retail is the place where you will make meta margins. So as we went along, even on the storage side, our composition of storage started changing. So
Yes.
first initial year, if you would have seen 70-80% would have been corporate. Now if you see, it's actually the reverse which is getting built up.
Right.
There is growth in the corporate also, but the composition has got changed.
You have multiple partnerships and you have been partnering and collaborating with a lot of warehouses and external ecosystem. How has been your experience there on that side? And also, what kind of partnerships are these? Are they short term, long term? Because you are ultimately storing the grains over there in the warehouses, right?
See, one decision which we took right at the beginning, because all the three of us were there from the bank. When we went into the rural areas, we found that enough of space has been created because of the government. Government has been promoting this Gramin Bandharan Yojana scheme. So there have been capital subsidies which have been given to various entrepreneurs by the government, because of which lot of infrastructure has got created already by the government. When we went there, we found out that the occupancy of these warehouses were very less because the entrepreneurs were not trained how to canvass to the people, one. Second is they did not have access to finance, because anybody who wants to store the produce wants immediate access to finance also, because it's a liquidity which he wants to create. And very few were there in the post-harvest space, especially on the NBFC side, who would actually go to the primary and secondary markets and give access to finance. So these two were strong points to us. So we decided that we will not build any infrastructure in our balance sheet. So even today, we don't have any warehouse in our balance sheet. So we have not really constructed.
Exactly.
So what we have done is that we have gone ahead and leased with the entrepreneurs. Mostly it is short-term lease, maybe for a year or max 3 years. We don't get into it. And there also there is no fixed lease component which we do. We build a profit partnership model. So based on how much has been the occupancy with the warehouse owner, suppose if it is very less, we share for a better price, right? 60-40. If it is slightly on the higher side, already he was doing 40%, the incremental value which he is going to get is probably less, then the sharing ratios will change. So there is no fixed obligation in my P&L for any of these warehouses in a continuous basis. If at all, if I have leased on a fixed rent model, I do a back-to-back arrangement with the corporate. For example, with A, I have entered into a lease contract and say that 100 rupees is the rental which I am going to pay.
Right.
I would have actually gone back to the corporate and did a fixed lease model similarly. So the variability of the rent, I have addressed this as a risk by these models. So that's what we have been doing. So in the platform now, we have almost 10,000 warehouses which are listed, and we manage about 2,000 odd warehouses by ourselves.
Okay. That number is quite decent actually, Nathan. Now tell me something about the risk mitigation, because I'm sure the warehouse will follow their own conditions and the rules, but how do you know that the goods or maybe the items or the produce which is being stored in the warehouse is absolutely safe? Point number one. And also, how do you actually analyze the risk before getting into the finance to that person?
See, as of now, as far as the funding is concerned, we are funding the goods which are stored within Arya's managed warehouses, right? So this 2000 odd warehouses,
yes,
which I was talking about. See, we have standard operating procedures for everything. So when the goods arrive, it is tested for quality, right? And after that, the quality report is generated. We have frequency of audits which are there, right? And there are surprise elements also which is put in place. So when the commodity comes in, it is tested for all the parameters which are required for that particular grain. For example, if it is oil seeds, we test for oil content also. Otherwise, it's mostly the foreign material as well as the moisture content which is generally which is tested. So we don't take any commodity without properly assessing the commodity, right? That's point number one. Point number two, as far as the risk is concerned in this business, right? You don't run a big credit risk because in all other cases, the repayment obligations are based on the cash flows which are there, right?
Yes.
Here, the need for your cash flows is not there because it's a liquid asset which you are carrying in. The risk which you carry in this is the operational risk of theft, burglary, swindling, collusion. These are the risks which are there. So we have mitigated these risks by taking respective insurance, one. Second is that we feel that the strength which we have is the audit, right? So our audit mechanisms is not manual. So there is a risk matrix of each of the warehouse in the commodity which we have done. So the head of the audit actually gets the audit report externally from the system, and he doesn't know which of those warehouses are to be audited how many times, right? So some warehouses will be audited 3 times in a month, some warehouses will be audited only once in a month, and nobody knows what is the frequency which is pre-decided, right? So this randomness is what we try to do physically. The second thing which we are trying to do now is the surveillance, right? So we have now put an AI-enabled surveillance in many of the warehouses. So our objective is that at some point of time we should have across all these warehouses. Now based on some risk matrices we have defined and we have put in almost about 400-500 warehouses, AI-enabled surveillance is there. This actually takes care of the inward and outward movement of bags. And if any movement is there in the times when you are not there, it gives a trigger also, right? So that these two mechanisms we have put in place for all the other risks which are there. With respect to price risk, we manage price risk by monitoring the commodity prices on a regular basis, and every week there is a margin call which is issued if the price falls. So the person is actually asked to supplement the margin. If in case he doesn't supplement the margin, we liquidate the commodity, and our ability to liquidate the commodity is high because already we have the platform. So we have enough of buyers and sellers on the platform.
Okay. And how does the business model, work for this whole storage facility? Because, the goods will be stored in your warehouse for maybe 15 days, 20 days, months, years, months?
The average is about 6 months. We give tenures up to 9 months. Because there is a storage or shelf life for all these agriculture commodities. Some commodities have a longer shelf life. Even there we give maximum of 12 months to the farmer because RBI restricts the maximum tenure to 12 months for farmer lending as far as the commodity business is concerned. But commodities like guar, mustard can be stored for a longer horizon. But we re-evaluate and ask the customer to pay back, and if the commodity or grain is good, he has the choice to get redisbursement on the same commodity later. Otherwise, it's broadly people removed.
And how competitive are your rates?
Rates, as I said, 13.5%, 14%. We are not competing with the banks. So what we do is that first choice is given to the customer to prefer the institution, because even with institutions we complement. For example, if I were given a choice, I don't want to build anything in my NBFC, right? Because I'll be unnecessarily consuming capital. The strength that I have is the distribution, and the strength that I have is the sourcing, because warehouse becomes the focal point for storage of commodities. And as far as the banks are concerned, they are getting immediate business, and it's a secured business, because if you look at even in the banks, the credit default would have been 0.001%. Just to give a perspective, all the three of us cumulatively would have handled about 40,000 crores of business in commodity, the promoters, right? With just about 0.001% delinquency, right? That's the beauty of this business. The second beauty of this business is you come to know what you have created within just 6 to 9 months.
Right.
That's how it is.
No, it's a very interesting learning for us, in fact, and the viewers also. So Nathan, let me ask you something very specific about the businesses now. So you are making money, you are profitable. This is a great business model, no doubt about it. But what about the ecosystem? Did you actually manage to make a difference in the farmer's life, in the entrepreneur's life, by setting up Arya.ag?
So any farmer who brings the produce, our belief is that he will make 15 to 20% more money than what he would have already been earning, right? That's the strongest belief which we have. Because what happens is that, especially in agri, when the commodities come into the market, the prices generally fall, and while the production is seasonal, consumption is evened out throughout the year. So there is a natural tendency for the prices to move up. So by and large, we have analyzed that a farmer makes 15 to 20% incremental money, whatever it is there. And for the processors, traders, I think the swiftness with which we lend, right? Because our TAT is very fast. Everything is automated today. My disbursements are automated. My sanction is automated, my release is automated, right? So while a bank might take, for example, 3 days to release the commodity, right? We release it in few hours because everything is in the palm top. So Arya.ag is an application. There is an account, my account, which is there. A person can actually pick up the particular SR, the warehouse receipt which he wants to get released. So he just clicks that, automatically it goes to the payment system, showing him how much has to be paid. It goes to the payment gateway. It clicks onto that and payment is received, automatically the WRs in the systems are released. So everything is seamless. Nobody in the system today has that. So the time value of money, whatever is required in the rural space, I think we were in a position to address that. Second thing which we were in a position to address is that these markets which are there, primary and secondary markets, nobody is operating. Right? So that is, I think, a farmer, a trader, or even a processor who has a small processor, right? Today, if he has to purchase the commodity or store the commodity, he has to go travel 150 kilometers away, which is the mandi which is there. For example, Delhi, Azadpur, Kota, these are the mandis which are there. We hardly operate 10 to 15% of our business there. Our business is primarily into the primary and secondary markets, more near to the farm gate. So we have saved this money, we have saved this travel cost, and even in interest, if some bank is willing to come and partner, we have said don't borrow with Arya then, don't please borrow with bank, because there also we earn. We earn a referral fee about 1.5% there. So that makes us a good earning, because I am not incrementally spending anything there. My warehouse is already there, storage is happening there, my BD executive is there. And now with this automation, actually my efficiencies have sprung up. Just to give a perspective, before this automation, just about 60 BDs we had, business development executives. They were churning about, say, 300 to 400 crores of disbursement. Now, just by increasing another 10, I have moved to 1,000 crores of disbursement. This year, potentially we'll be doing about 1,000 crores of disbursements. Thus, technology has actually played a good game there for us. And the sanction is all AI enabled, right? Machine learning enabled. So it comes, actually the commodity is now tested with AI. So the lab, going to the lab, provisions is getting out. For a few of the commodities we have already tested. The person stores the commodity, AI generated quality report comes in, see the beauty, and then after that the commodity, once it is inside, the guy clicks for disbursement. The sanctioning is actually through machine learning up to 1 crore. So, and disbursement happens immediately. So the quantum of time that a person spends unnecessarily going to different places doesn't, and documentation happens at his doorstep or at warehouse. So what is the best thing which you can think of? And we don't have offices anywhere in the country. It's just the head office and Bombay office.
Right. But directly, indirectly, how many people work with you now?
About 2,000. Other than the security guards, because again, if you take about 2,000 warehouses, 2 security guards, another 4,000 get employed.
So, the biggest challenge for most of the startups, fintech companies, is to become profitable, right? Even the companies who are unicorns are not profitable. You are already profitable. Now, given that background, what next for you? What are your plans now for next 2 to 3 years?
In the integration process, already we have thought through on this. Pre-harvest space, we were not there. So we acquired a company called Prakshape, which is into data analytics and digital imaging. So it's already done, right? So there we are in a position to actually predict stress in the crop, right? For any crop advisory in future, for all these FPOs, right, which I'm talking about, it will be easy for us to actually give indications of when the fertilizer is to applied, when moisture is to applied, what is happening to the crop, because I can go up to the last level where a particular unit of land is there because of this, right? So the Prakshape is acquired, and we have actually launched an app which is called Arya.ag for this FPOs. So there they can actually monitor their crop at the ground level. Dissemination of information can happen because broadcast is possible in the application.
Right.
So any information which I need to actually pass to the farmers can be broadcasted. And if the FPO wants to aggregate inputs, it can aggregate inputs. We have created financial lines for that. So for example, an FPO creates, all encompassing we have now built. An application is there, which is technology, and the requirement is there, which is finance. So suppose if he aggregates and says that this is the amount of input which I need to purchase, and this is a quantum of finance is readily available, right? And the finance is given to the FPO. Now he aggregates produce and then brings in, right? Warehouse receipt finance is there, immediately he can access finance. So what happens at the FPO level is, because of the aggregation which is happening, these small and marginal farmers will get immensely benefited. Already we are in touch with, we are in active engagement with about 500 FPOs, and 6 lakh farmers are associated. And our belief is that government is now saying about 10,000 FPOs to be built. Right. Even if I take 30-40% of them, I think it will be a significant impact which will be creating.
Okay. Did you face any challenge in terms of the defaults, or maybe farmers are not complying, the contract which they signed with you?
No, fortunately, those issues till now we have not come across. And just to give a perspective, because this business we had handled on the other side, we have not faced issues in the commodity side at all. And if at all, if for example, I can say there could have been one remote instance also where we would have gone to the farmer and deferred a liquidation, gone into a police station, asked them in commitment and writing saying that if you don't pay up to this spirit, go and liquidate, right? And that was one stray incident in my entire span of last 2 decades.
Oh, that's really meaningful. Let me take your view also on the industry today. So we have seen large number of fintechs emerging from India. India has become a cream spot specifically now in the fintech space. The tech solutions, have actually, strengthened the India's whole psychology and the philosophy. How do you see the Indian fintech space or the tech space right now?
See, we need to bifurcate this into 2 parts.
Sure.
One is the payment part. The other is the facilitation of finance part, right? With UPI coming in, the relevance of the payment part, how best it would be, I'm slightly suspicious. I don't want to comment about others, but it's going to be challenging because now easier methods of payments have been put in place. I do not know how aggregated payments also might be easily put through, right? Because something can crop up there and then get it done. So purely if somebody is into a fintech space addressing payment problems alone, right? I think there will be some challenges. They need to get associated in terms of what more. But finance is there, right? This piece, because the country is growing, right? And we'll have, even if we say 6 to 7% growth, the need for money is going to be very large. And if any fintech company is associated on both the ways, right? Finance as well as payment solutions, I think there they might not face that much amount of problem. Only thing is their customer acquisition costs, etc., they may have to bring in slightly to a lesser level and see how they can scale up the business in a large way, because the immediate competing partner will be banks, right? If you build a model, immediately there will be a mechanism for taking it up. So we need to figure out how they engage with the banks. Just as I said, for example, we are okay to give away the business to the bank because we know pretty well that banks cannot hold the commodities. But in other cases, they will have to figure out how they partner with them, maybe as a BC, as a co-lending, etc., and then figure out their ways.
Noted your points, Nathan. I think remarkable insights for sure. This was a different chapter for us. In fact, we somehow didn't manage to interview someone from the agri-tech space, but good that you know.
No, my pleasure. Actually, the space is growing and you need to really look into this, because why I'm saying is this not with respect to Arya alone. the country is actually blessed to have so many agroclimatic zones.
Right.
Now there are a lot of inefficiencies in the system which can be addressed, right? Be it production, be it transportation, right? Be it anything per se.
Yeah.
That's why I say, for example, even if we look at all the instruments which we have developed for ourselves, right? Arya.ag, just as a platform, the 3 columns which I said that we are engaging. Arya Shakti, as I said, FPO only as a segment you are having. Arya Vision, surveillance, it is not only for us. We can sell this as a product to all the warehouses across the country, right? And that Arya Verse, which I am talking about, Prakshape, which has been acquired, if some processor wants to know where the crop is, what is the stage of the crop, where I am going to procure the crop, he has that opportunity, right? So you have embedded everything through technology. That is the beauty. Similarly, if on the tech side and the agri side, if crop precision has to be found out, there are a lot of technologies which have come up. So it is an emerging space and challenges are there and people have to wait patiently because it's in a very nascent stage. I think, but there is immense growth opportunities over there, both on the agri fintech as well as because transparency will ultimately give you cash flows also, right? Because the one immediate challenge which you face in the rural areas is, unlike a salaried guy where you know everything black and white, you don't have the opportunity to get to there. But once you start capturing the cash flows, which the system is showing, right? This much is the produce which is grown in. ENAM, for example, is an initiative which has been developed by the government.
Right.
So every amount of produce which comes through, if it goes through ENAM, there is a transparency of how much that person has sold. So whatever you had a problem earlier saying that I don't have records to assess, hence I am not in a position to lend, right?
Now it has the records, No, agree. I think quite interesting points, Nathan, and very realistic one. On that part, in fact, a lot of BFSI companies and the fintech companies are looking at cash flow lending as one of the important area, that side, because otherwise it's very difficult. Those people do not have any other records, right? So thank you so much, Nathan. So that was Nathan, and thank you so much for tuning into Fintech Diary at etbfsi.com. Stay tuned. Thank you so much.